Good morning, welcome to CATEX-TV. My name is Frank Fortunato. This is a live broadcast from Princeton, New Jersey. Today is Tuesday, November 10th, 2009. It's 11:30 a.m. Eastern Standard Time in the U.S. It's 4:30 p.m. in London, 12:30 p.m. in Bermuda, and in Mexico City it's 10:30 in the morning. If you need to reach us during the broadcast, you can phone in toll-free at 1-866-67-CATEX. Overseas, our AOL instant mail address is CATEX-TV. This is another one of those notations worthy of how far we've come so quickly. In 1951, today, on this date, November 10th, for the first time, without the assistance of an operator, it was possible to make a direct telephone call between the East Coast of the United States and the West Coast of the United States. The mayor of Englewood, New Jersey, phoned his counterpart in Oakland, California. Unbelievable. The president is at Fort Hood, Texas right now with his wife, Michelle Obama. They're attending a memorial service for the people who were killed last week by the attack from the Army psychiatrist, Major Hassan, I believe his name is. He has now regained consciousness down at Brooke Army Medical Facility in San Antonio and has declined to speak with investigators. He has instead requested his attorney, which is his privilege. The president leaves, I believe, tomorrow for a trip to Asia. We'll discuss that in passing a little bit later on. Stock market is down about 6 points right now after a very big day yesterday. Now we'll go to our news. A badly damaged North Korean patrol ship retreated in flames Tuesday after a skirmish with a South Korean Navy vessel. On the right-hand side, you see the South Korean Navy vessel that's pulling away, backing up from the North Korean ship, which is on fire. This incident occurred in the western waters off the west coast of South Korea this morning. There were no casualties on the South Korean side. They don't know whether or not there were any casualties on the North Korean side. The exchange of fire occurred as the president is due in Seoul next week. According to the South Koreans, a North Korean patrol boat had crossed the disputed western sea border at about 11:27 a.m. this morning, local time. It drew warning shots from a South Korean Navy vessel. The North Korean boat then opened fire. The South ship returned fire, and the northern ship sailed back toward North Korea on fire. The incident occurred about 120 miles off the coast of Incheon, port city on the west coast. The South Koreans say that the shooting lasted for about 2 minutes. The North Korean fired 50 rounds at the South Korean vessel, which was about 2 miles away. It was lightly damaged. The South Koreans do say that there were several Chinese fishing boats in the area at the time of the clash, and they believe that the clash was accidental. They say that the two North Korean ships crossed into South Korean waters in an attempt to chase away the Chinese fishing boats. However, the South is still investigating whether the incident was deliberate. To reinsurance news coming out of London, Reinsurance Magazine is reporting that Tom Corfield, the director of underwriting at Liberty Mutual Syndicates, has left the company. Corfield has been the senior underwriter for 11 years at the Lloyd's Syndicate before becoming Syndicate 4472's director of underwriting back in April. Matthew Moore, who took Corfield's place as the active underwriter at 4472, is remaining. Liberty is one of the biggest Lloyd's syndicates in terms of underwriting capacity. The company released a statement saying that Mr. Corfield and Liberty Syndicates have mutually agreed that Tom will be leaving the business to pursue new challenges and interests. It's unknown yet where he's going. This is a rather interesting story. Moody's, partially owned by Warren Buffett, announced that they believe that AIG will be able to repay its rescue loans from the U.S. government. They said that the $84 billion that AIG has received in the form of federal loans and guarantees will be paid off. In affirming its credit ratings in AIG, Moody's said that the company's core business is stabilizing and that the government seems committed to working with the company to maintain its ability to meet obligations as they come due. Moody's also applauded AIG CEO Robert Benmosh and his recent shift in strategy not to rush into sales of the group assets. Moody's observed that the slowing approach to restructuring could help AIG to generate more favorable values than would be the case under rushed asset sales. Take note of that, Ed Liddy. No more fire sales. Hank Greenberg was right, it seems. Moody's warned that its ratings on AIG could be lowered if the realizable value of AIG assets declined. We'll keep an eye on that. That's good news for the taxpayers. Meanwhile, Bloomberg is reporting that Hiscox, the third biggest insurer at Lloyd's, is, quote, happily hiring more workers as reinsurance rates climb to their highest on record, driving up 9-month sales. I don't know what rates they're talking about. According to Hiscox's finance director, Stuart Bridges, the books are going very nicely, so we're growing our people count. Hiscox has added about 200 people this year, bringing its workforce to 1,000. Gross written premiums have risen 32% to £1.2 billion for the year to September 30th. According to Mr. Bridges, prices for reinsurance, which accounts for a third of Hiscox's total book, are, quote, at an all-time high. The credit crunch in last year's American hurricanes Ike and Gustav eroded the capital reserves of insurers, meaning that they had less money to back policies. That caused Munich Re and Swiss Re, for example, to pull back from some product lines, propping up rates for reinsurance. One analyst in London said Hiscox is exceptionally well positioned in respect of its exposures, as they're where we've seen the highest premium rate increases over the last 12 months. Fellow Lloyd's insurer Beazley said 9-month revenue rose 45%, up to £862 million as reinsurance prices climbed 9%. Beazley's, however, estimated losses from its political risk book, which insures companies against contract disputes and terrorism, are about £33 million. One observer said this is the first time we've seen evidence of recessionary losses actually coming through here at Lloyd's. The UK government's credit rating is, quote, absolutely safe, despite a warning earlier from Fitch Ratings that Britain is the major economy most at risk of losing its AAA status. UK Trade Minister Mervyn Davies made this announcement this morning. Sterling had dropped sharply against other major currencies earlier today over fresh concerns about Britain's ballooning budget deficit. Earlier, Fitch said that the UK was, quote, potentially most at risk of a downgrade, given that it faced the largest budget adjustment. Fitch added that the UK's current stable rating outlook reflected our expectation that the UK government will articulate a stronger fiscal consolidation program next year. Mervyn Davies said that I think the government's been very clear that over the next 4 years there's going to be a program to reduce the public debt. There's a huge amount of positivity about this country and this economy, but as a result of the banking crisis, we've got to take some sort of action. The cost of insuring UK sovereign debt against defaults rose slightly. The 5-year credit default swap spread stood at 56 basis points after closing Monday at 55.25 basis points, so it went up a little bit. Stock market remains down about 6 points. We'll go to a word from our sponsors. Tropical storm Ida has made landfall. We wouldn't be talking about